to really discuss about nutrition landscape, especially on this continent, for many reasons, around SME, small and medium enterprises. I think the importance cannot be emphasized in terms of how many jobs they create, their contribution to the GDP, the proportion of food they drive. They actually feed majority of us on the continent. So very strong force to reckon with. But as we know, among many other things, they lack access to capital. Not the only things they lack, but one of the most important. And that kind of cripples their ability to really realize the scale they would in terms of especially food system transformation. But as we know, as we're having those challenges, then came COVID. COVID came with other additional complications on especially these SMEs, trade disruptions, economies have slowed down, further impacting on their ability to do what they do. With regard to this, actually again, working with a number of many partners who've been funding us with the Dutch, we have Irish Aid, the Canadians, and a number of other people who supported us. We've been able to provide some grants to keep some of these SMEs afloat. So first speaking, again, working through those donors, we've invested almost500 million Tanzanian shillings in these small and medium enterprises to keep them afloat. Some really quick, but that's an emergency. On the strategic level, we know that they need much more than just grants in order for them to scale up. So we are here to have this discussion. How do we improve access to capital for small and medium enterprises? And to discuss this, we've put together a mouth-watering list of speakers. To start with, we have 2 keynote speeches. One from Dr. Lawrence Haddad. He will say hi to you very shortly, who is our executive director at GAIN. We have also been privileged to have the ambassador, Mr. Yeroni Velhul, and I understand from Caroline that I'm the only person who pronounces that name right. Ambassador, I hope I'm right by doing that. So we are really privileged to have you again sharing your experience. So those would be our keynote speeches, really giving us ground and opening us up the discussions before we go into now a panel discussion that I will introduce later. But without further ado, allow me to introduce, rather invite Dr. Lawrence Haddad to say hi and again give us his keynote remarks.
Thank you, Enoch. Thank you, everybody. Great to see you all. Thank you, Ambassador, for being here. And thank you to Sahara Ventures for co-organizing this event with us. My name's Lawrence Haddad. I'm the Executive Director of the Global Alliance for Improved Nutritional Gain. Friends and colleagues, we've got a problem. We've got 3 billion people worldwide who cannot afford a healthy diet. I don't know about you, but I found that outrageous and unacceptable. And to me, it's a violation of a basic human right. 1 billion of those 3 billion are based in Africa. That represents 3/4 of the population of Africa. Again, astonishing figures, not that surprising, really, when you think about it. But I didn't know the percentage of African population was that high, 75%. Clearly, our food systems are not working properly. They're not working for equity. They're not working for the poorest. They're not working for healthy and sustainable diets. They're working for lots of other dimensions and for lots of other outcomes, but not those outcomes. So they need to be transformed. They need to be changed. They need to be rebooted, whatever the word you want to use. But they need to be changed quickly. Now, it's not going to be a quick change, but we need to start acting quickly. And we need to, in 2030, we need to look back at 2020 and 2021 and say that was the year things began to change. That was the year that we started to fix food systems. Now, we're not going to change food systems unless we focus on small and medium enterprises. And that's pretty much the case wherever you live, but it's pretty clear it's the case in Africa. The numbers tell us that 70% of all food that is produced, sold, marketed, processed, retailed, advertised, stored, distributed is via small and medium enterprises. They are the backbone of food systems in Africa. They are going to write the future of food systems in Africa. But they're really, really creaking right now. They're really creaking. Before COVID, they were struggling. They were struggling to get access to technical assistance. They were struggling to get access to finance. We saw that in the World Bank database on small and medium enterprises. And you'll have to forgive me, there's a fire alarm, a drill going on in my building. That's what the noise is in the background. But prior to COVID-19, SMEs were really struggling with finance. We see that in the World Bank database. Now, during COVID, they're struggling even more with finance. So if you're an SME and you're in the nutritious food space, what do you need? You need to be able to get investor ready. You need to be able to get your business plan in order with various contingencies. You need to be able to understand what the government is doing on COVID-19. You need to be able to understand what the opportunities are that are coming along. You need to be able to understand and get in place all your paperwork, all your scale-up plan for your employees. You need to make sure your inventory is ready. You need to make sure you can get the right equipment. You need to make sure that you've got all your trade relationships right, and you need to make sure your storage facilities are up to scratch. You need to get investor ready because that investment opportunity will come along. And for that, you need technical assistance. Most small and medium enterprises don't have massive teams of technicians and lawyers and financial analysts working with them like bigger companies do. They need help. So that's where, again, with the support of the government of the Netherlands and Sahara Ventures, that's where we come in. We come in and provide that technical assistance. That's where the Sun Business Network comes in, that is co-hosted by GAIN and the World Food Programme. All of our programs at GAIN are designed to identify small and medium enterprises that want to do something good in the nutritious food space. It helps them network with each other and with technical assistance. It helps them speak with one voice. We help get them small grants, as Enoch was saying, for it could be equipment, it could be a marketing strategy, it could be a business plan development. We help them with a whole range of product specifications, safety testing, safety standards, and then we will graduate them through to help them get access to formal finance. And that's where things like the Nutritious Food Financing Facility that my colleague Sophia Condes will tell you about later on, that's when that comes in. So you have kind of a conveyor belt of identifying SMEs that have the potential and want to do something in the nutritious food space through supporting them with small grants, technical assistance, networking, speaking to governments, and then graduating them through to getting access to formal finance. Because formal finance is impossible for them to get. They're too small for commercial banks, too big for microfinance. And they are hurting. SMEs are really hurting in the COVID-19 era. We did a survey with the Sun Business Network back in June of 400 SMEs. They're resilient SMEs. I was surprised, about 16% of them, only 16%, 16% of 400 is a lot, but still only 16% of those SMEs said they were at severe risk of being closed down. So that means 84% of them were somehow able to ride out the storm, but only up to a point. And that's why Enoch was very right to talk about this Keeping Food Markets Working program that we have at GAIN that is really helping SMEs get through this storm. But these programs need to be scaled. They need to be much bigger scale. So the Nutritious Food Financing Facility is a $60 million facility operating in 4 countries, but that's tiny. We need 1,000 nutritious food financing facilities. GAIN has been able to work with about 1,000 SMEs over the last 10 years, but that's tiny. We need to be able to work with 10,000, 100,000 SMEs. So that's what I like so much about what Sahara Ventures is doing. It's building the ecosystem. And this is what GAIN will increasingly be doing, building the ecosystem so that not just we can support SMEs in the nutritious food space, so that lots of other people can, including the government. So I'm very pleased to be here. I'm very pleased to be part of this. With my other hat on, I'm the chair of Action Track #1 in the UN Food System Summit that's coming up in 2021 in September. The action track that I'm in charge of with GAIN is ensuring access to safe, nutritious food for all. And we have a leadership team of 30 people. And I'm very happy to say I've got 4 SME leaders in that leadership team. And they will be bringing their practical SME leadership perspectives and skills into that discussion so that we can do the best thing for SMEs. Enoch, I will finish now with just a salute. And I don't know how many SMEs are on the call, but all of you work with SMEs. And I'm just, whenever I go and visit any of the GAIN country offices, which I do very frequently, although not this year, obviously, I'm always really inspired by pretty much everyone I meet. I'm introduced to ambassadors such as the ambassador on the panel today. I'm introduced to development partners, to government officials, to NGO partners, to UN partners. But really the group that always inspires me the most is talking to the small businesses, the small business entrepreneurs. They're hanging it all out there. They're putting their livelihoods and their lives on the line. They're taking risks. And if their risks don't pay off, their lives, their livelihoods, their families' livelihoods are really at risk of, of being destroyed. When I take a risk in my job and it doesn't work out, fine, I'll still get a salary next month. Same with my friend Enoch. Same with many of you in this room. But when they take a risk and it doesn't pay off, their very livelihoods are on the line. Their families' prospects are on the line. So we need to salute SMEs, but more important than saluting them, we need to support them. Thank you, Enoch.
Great, thank you, Lawrence. I like the way we need support, salute and support SMEs. Thank you very much for your comments, very rich. If there is anybody who wants a further clarification or question, please wait. We will have the ambassadors' comments and then we will open it up a bit for a comment or two. So thank you, Lawrence. Ambassador Jeroen Verhoel, karibu sana. We are excited to have you on the call and definitely looking forward to hearing from you. Please take it on.
Asante sana, Enoch, and it's a pleasure for me to be here. And thank you very much, Lawrence, for your warm words. I guess you are in Utrecht now. Is that where the GAIN headquarters is?
GAIN headquarters is in Geneva. I happen to be in the UK right now.
Oh, okay, yeah. Well, it's good to see so many people gathered in this virtual meeting and to see some familiar faces and some familiar organizations here, like Jennifer Barn, who used to work in Tanzania as with SAGCOT, if I'm not mistaken, and to see the African Development Bank here, one of the important actors in providing finance, the issue that we're discussing here. And thank you, Lawrence, for setting out the challenge that we face. 3 billion people with insufficient access to good, nutritious food. And Tanzania is absolutely one of those countries that is facing this challenge. Tanzania faces a double challenge, as I understand it. It is on the one hand undernutrition, especially with under 5s, but on the other hand also overnutrition. Obesity is a growing problem in Tanzania. So nutrition is a serious issue that deserves our attention. And this is not something that can be solved by the government alone. It needs to be done in a multi-stakeholder partnership. And I'm glad that GAIN is taking the leadership in cementing and setting up those multi-stakeholder partnerships. I was reading a paper that was published in May about the work of the multi-stakeholder partnership on nutrition in Tanzania, on the action plan. And I found that very illuminating about what these kind of platforms can do and how involving other actors than just the government actors is enriching the strategy and making it much more effective. So I think that GAIN is doing a good job there in not only leading this work and facilitating this work, but also sharing the knowledge about what we have learned in improving the strategy. So compliments for that to GAIN. Let's look at the issue at hand, access to finance for SMEs in trying to improve their role in providing better nutrition. A number of elements there, I think. Long we have thought that by increasing food production and food availability, we will be able to tackle the problem. I'm afraid that that is only one part of the solution. So increasing food availability and production is one part of the solution, but then making sure that this food is utilized in a proper way is another challenge. And by the fact that Tanzania still faces these issues in terms of malnutrition, I am afraid that 34% of the under 5 are stunting in Tanzania. By those figures, you see that there's still a lot to do to improve access to nutrition in Tanzania. We are tackling these issues, try to tackle that in a holistic way by looking at what we can do in a value chain. So let's take an example of potatoes. The Netherlands is active in different value chains. Potatoes is one of them. And what we are trying to promote in the potato value chain is, of course, production, enhancing food availability, but also the marketing of those products, so that when farmers have an opportunity to produce more than they need for themselves, that they can sell that to the market at relatively good prices. So for that also we provide storage solutions so that they don't have to sell at the moment of harvesting, but that they can store and sell at the moment that the prices are better. But also market information, what kind of varieties are requested from the market and can be delivered by the farmers. Also, access to finance, the issue we're talking about here, is one of the elements that needs to have its place within the value chain. And within the potato activities, we try to link farmer groups to commercial banks that can provide loans to those farmer groups so that they can enhance their production. And that is quite successful. So the NMB is one of the commercial banks in Tanzania that is active in this value chain. And for instance, there was a farmers group in Njombe area that wanted to expand its production of potatoes. They got a loan of 350 million shillings from the NMB, and they managed to produce enough potatoes to pay back that loan within 6 months. So there are enormous opportunities in marketing these agricultural products, but the big problem is to bring the different parties together. Who is the broker who brings the different parties together? And the organization that Jennifer was working for in the past, SAGCOT, is one of those organizations that tries to bring up such a broker role to bring those partners together. So that is extremely important, and unfortunately we don't have enough of those organizations in Tanzania, and when we have them they don't function perfectly. So still there is a need for external intervention in in value chains in order to bring those parties together so that they have proper access to finance. If we have managed the situation within the value chain, are we then sure that we have contributed to solving the nutrition problem? I'm afraid not. Because what you see, and I saw that with my own eyes when I was visiting these projects in the Southern Highlands, is that those production figures can be improved, production can be more efficient, production can be much higher. But that does not mean that the diet of the family members in the groups will improve automatically. Also still there is a need for an additional intervention. And what I see when I look at our interventions in the value chains, then we focus mostly on the economic side of it, on the productivity side, on the efficiency side, on enhancing the access to knowledge on better farming practices, etc. But the nutrition side is not really an element that we focus on because everybody assumes that that goes automatically. But I think experience learns us that is not the case. So that is something that we need to take on board when we look at our interventions in those value chains. I gave the potatoes as one example, but aquaculture is another value chain that we are active in. And that is also an important provider of protein in nutritious diets. So that is another area where we are active in. But also there we're focusing very much on production and marketing and not so much on the nutrition of the families behind the workers in those. So I think that is something that we could discuss further, how we can improve our attention for nutrition in our interventions in those value chains. Another element I wanted to raise is access to finance. Is that a problem only when we talk about nutrition SMEs? If I look at what we are seeing here in Tanzania, then I look at the business climate in which access to finance is a bottleneck, but not only for SMEs and certainly not only for SMEs in the nutrition sector. So our focus is much more on trying to improve the business climate in general, so that all companies can benefit from a better business climate. And I would be interested to know if SMEs in the nutrition sector are so special that they need special attention, or that they can benefit from this general approach from improving the business climate. So for example, together with the Tanzania Startup Association, the Netherlands is trying to improve the ecosystem for startups. I guess that nutrition NGOs, SMEs can benefit from that work as well. But if there is a need to have special provisions for SMEs in the nutrition sector, I think it would be good to know that. So these are some of our experiences and some links that we see with the discussion that we are having right here. Let me once again commend Sahara Sparks and GAIN for the work that they are doing. The Netherlands is a proud supporter of the work of GAIN, and we will continue to do so. And we also enable the work of GAIN here in Tanzania. And we're very happy to be associated with that. And we're very happy to see what more we can do in order to make our work much more effective than it is right now. Asante sana.
Great. Thank you very much, Ambassador. I'm sure you found those comments rich as I have. And if any one of you, before we move on to the panelists, would have a comment or two about the keynote speeches from Dr. Lawrence and from the Ambassador, please feel free to unmute yourself and post your comment or question. If not, you can also post it in the chat box, and we can address it as we go.
Enoch, can I come in?
Yep.
Can I maybe put my colleague Sophia Condes on the spot a little bit here and ask her to just quickly address the ambassador's question, which is a very good question about, what do SMEs in the nutritious food space, do they require additional support, or is it just enough to improve the business environment around them? Sophia, do you mind?
Thank you, Lawrence, for putting me on the spot, and thank you, thank you, Ambassador, for your question. So, short answer, yes, they do require targeted support. Of course, improving the business environment in general will support those SMEs. However, the SMEs that are producing nutritious foods for the local population need specific support. Why? I'm going to give two main reasons. First, we need to start by distinguishing what are the SMEs that are supporting the good, so that will have a positive impact on nutrition, and how do we exclude the SMEs that are having a negative impact on nutrition? Because I think we can all agree that maybe we don't need more sugar-sweetened beverages being overconsumed everywhere. So we need to distinguish to support the good ones. And then secondly, those SMEs that are making nutritious products to be consumed by the local population face even higher restrictions in their access to capital, because most of their business is in local currency, which means that a lot of the financing mechanisms available for agri-food in general are focused on export markets and are very much biased towards cash crops that are not nutritious, so that are important in a market ecosystem such as coffee, tea, cocoa, but that don't have a positive direct impact on nutrition. So we do need to make that distinction and to make sure that we're supporting the enterprises that are doing good, providing nutritious food for the local markets. So that requires a whole set of criteria in itself and a whole set of support mechanisms. And I will go into a bit more detail in my presentation. Thank you for the question.
Thank you, Sophia.
Great. And I think, Sophia, you've answered the question Catherine posted earlier. She was wondering, what is nutrition sensitive SME? And I think right there, you've indirectly answered that question. So if there are no other comments or questions from our two speakers, you will allow me to introduce to you our team of very exciting panel. We have two SMEs from Tanzania who are doing the good. We want them to do the more biofortified crops, products, and all these. So they will be sharing their own experience while doing business in our country. We have, so for those, we have Fortunata Mari from AFCO. AFCO, say hi.
Hi. I am okay. So I can introduce myself. Can you go on and introduce myself? Yeah,
for now, that will be it. I'll come back to you. And then we have Wilfred Mshobozi. Wilfred Mshobozi, he works with the crop biosciences. Another SME doing great. Wilfred, please unmute yourself and say hi.
Hello. Hello.
Hi, Wilfred, we can hear you. They are based out of Arusha, doing a lot of great work around iron, iron-rich beans. We'll hear from them. And then, so those will give us their own experience in accessing finance for us really to have a grounded discussion. And then we'll have Ability Kakama from NMB. NMB Bank will share with us. Hi, Ability.
Hi, hello everyone.
Great to have you.
Thank you.
NMB will share with us the experience in dealing with SMEs, especially. What are some of the opportunities? What are some of the challenges? But beyond 2020, what are some of the things we should be looking out for? And then we will have Sophia, who's just spoken, replied to the ambassador's question. Is our program lead at GAIN, leading Nutritious Food Financing Facility. She will share with us some of the innovations, innovative ideas, ways of financing these enterprises for them to do a better good. So far, that's how the mouth-watering panel list is looking like. And without further ado, I will come to you, Fortunata. Please share with us your experience, one as a person who is doing business in Tanzania, but also give us the gender angle. If there are challenges in accessing finance, is it more difficult to get, is it even more difficult as a woman? Give us those perspectives. What are some of your experience and learnings? Take it away.
Okay, thank you, Enoch and Ada. My name is Fortunata Mari, and I'm co-founder and managing director of AFCO Investment. AFCO Investment is a small enterprise, and we are in a food processing industry. We are processing staple food and like maize, but the innovation part of our product is we are processing biofortified crops like provitamin A maize and sweet potato, which they are rich in essential minerals and vitamins. And 8% of our customers, they access our food from retail shops. So we are channeling our product through retail shops, formal and informal retail shop. And we have the number of products for children from 6 months and family and other vulnerable groups. Okay, the issue of accessing funding, I can say it has been a critical challenge for small enterprise, and it's even worse for women. You understand, as a small enterprise, there are several initiatives that are taking place from different partners, banking, government, to resolve the issue of SMEs to access funding. But from my experience as small enterprise, I've been receiving the feedback, the same feedback, or from money lenders, let's say commercial bank, from investment bank, even from other investors. The thing is, they just have the different tones, but as for me, I can see they are just the same, and it has been a challenge. For AFCO, we are in a stage of scaling our business. We have reached somewhere where we want to capture new market. We have reached somewhere where we want to improve our efficiency in production, increasing production, capture the new opportunity which is around us. As we say that we'll be processing the staple food. So we see a lot of investment opportunity to capture the new market, but the issue is the scaling, and we need fund, and a substantial fund. We have been approaching bank, commercial bank. Most of the commercial bank, they are ready to provide fund, loan. But the challenge we are facing as AFCO, most of commercial bank, they are ready to provide a very small amount of money, because whatever they are ready to give, it's depending with the collateral you have. So you have to give the collateral so as you can get the amount of money. It's difficult as a woman, African woman, entrepreneur. I don't have collateral. We have the family collateral. So if I need to offer the collateral so I can get fund to scale my business, that means I have to bring all the families, and I know it's not possible to offer the family house and whatever, so as you can get the fund that you see this fund can help you to scale. We want machine, we want the technology machine that will increase production and whatever, and will improve our efficiency so we can sell our product. We can compete in the market. We can sell our product with affordable price so we can compete with and have food which are there in the market. As Arad says that as a small enterprise, SMEs, we feed 70% of population in the market. So we have been there in the market and we are still in there and we are selling food. It doesn't matter their health, but we are selling. And the other problem or challenge we are facing in accessing fund is the cost of the loan. From commercial banks, very expensive. They offer almost 25%. Most of the banks, they offer 25% interest per annum. And there are other percentage, like 1% insurance, there are other service loan, like 0.something%. So it's expensive. It's not affordable for us to survive, to pay loan and then still go on with the business making profit. And I understand there are other organizations nowadays, they act as a guarantor, so they can help you to access fund from the commercial bank, but they stand as a guarantor. But if you agree with them, at the end of the day, you have to pay another 2% to guarantor. So it's 25%, 1%, 0.5%, and you have 2%. So it might even reach to 30%. It's not affordable. And for myself, my business, we have tried to approach investment bank. Investment bank, they are ready to provide money with at least a reasonable interest rate. But the problem, you need to offer the collateral. So as a woman, as a small enterprise, I need maybe 200,000 USD so I can purchase machine. I don't have that collateral because at least you need to have the collateral which it has the same value with the loan that you want to borrow. So it's expensive. We have tried, it's 2 years now, we have tried to access fund to scale. We have tried to approach other investors, but the feedback we get for other investors who they're interested even to invest in nutrition, they say they are ready to offer the money, but the feedback is our system as a small enterprise, internal system or managerial capability, they are not ready to absorb the loan or the amount of fund that they are ready to offer. So we have been somewhere struggling, and we are growing very slowly because we sell, then we invest, we sell, we invest. So it has been 2 years now. We have been experiencing the same challenges, the different feedback with the different tones. And I don't see the clear, holistic solution for us as small enterprise. I can say at least for medium, but for the small enterprise and the business that are owned by women, it has been difficult for me. That is my experience, really.
Thank you very much, Fortunata, for being so kind and sharing your business experience. I'm sure colleagues and other people listening in will have some comments. But before we take those, let's also listen to Wilfred. Wilfred Mshobozi at Crop Biosciences. Take it away.
Hi, everybody.
Hi, Wilfred.
Can you hear me?
Yes.
Okay, good evening, everybody. My name is Wilfred Mshobozi, CEO of Crop Bioscience Solution. I have my business based in Arusha, and we are working on nutritious high iron beans. And we have been in this business now for about 4 years. And we had our own vision where we wanted to go. But unfortunately, our vision is not backed up by the resource we would need to have. For example, It has been now 2 years since we approached the Tanzania Agricultural Development Bank. It goes back and forth, and at one time they would ask you, okay, do you have a collateral to support you of what you wanted to invest? And then you provide a security you have. They say this is not enough, because one thing which I know, even if you put up a collateral, they have a special formula which they will undervalue. They say, this one will only calculate at 50% of the money you wanted to have. So you need to have extra security to secure the loan. And now, if it's the house, I got to own one house. So where do I get another house? So it has been going off and then you say, okay, if you want to put up a processing plant, where is the land? We approached the regional authority as well as the district authority, and this is our plan. We want to set up a beans processing plant, and can we offer us the land for setting up a processing plant? The answer you get is very unfortunate. You are bringing a factory in a community, they will benefit from generating income as well as generating the job for women and the youth. But the fee they charge for a commercial industrial plant is 100% prohibitive, because they would ask the residential area, they would say, for this residential area, you can pay, let's say, for square meter is 10,000. When you talk about industrial, where we are going to create a job, they say each square meter is 40,000. So if you are looking at an area for about, let's say, 400 square meter, where you could put your plant plus the area required to do the processing, storage, and what, become prohibitive, because you need to invest almost 40 to 50 million Tanzania shilling just to acquire the land for processing plant. So it's now you can to buy the loan to put up the factory. So you know all this become a complex challenge. You cannot have a land because the price is prohibitive. You cannot get a loan because you don't have the land to invest. So that is the current situation. But when you go to the commercial bank, they say, oh, we have money, but this money belongs to our clients. So the interest rate you are charged between 18 to 25%. Which business you are talking in the agri-food industry, you'll be able to repay back the loan at easy at this interest rate. Also, the grace period they give you to start the repaying. Some will give you have to start to repay the loan after 3 months. This is investment. How do you start to repay the loan even before you start to produce it? Because this is investment. So we don't have a fund specifically targeting for investment. And you go to the commercial bank, they will tell you, no, we need actually to get our repayment immediately after 3 months. You can't do it. So we are remaining in a situation whereby it is very difficult for us to secure the loan to expand your business. But also there is another challenge. When you get a partner wanting to partner with you, it will also come with several questions. You need to have all this system of management in place, but also the enabling environment, which is even beyond from us. For example, an investor wanted to partner with you. You want to be sure he'll be able to recoup his investment once the production is starts price. But that is not entirely dependent on it, depending on the government policy. If the government policy is not stable, that's nobody investor will be having any appetite to invest, to partner with you. But there is also issue of taxation. The taxation system has also been challenging. And for example, we are buying a tractor for applying our partners, out growers, to produce beans. But when you go back to buy the spare part is vertible, while the tractor is not vertible. So you find what by the time you wanted to make even a small margin, or most of the money you are making is going to the spare part, because everything they say agriculture input is not vertible. But when you go to buy the spare, it attracts the VAT. So that is the scenario which we are caught in. But what is our strength is that we are not giving up. That is my strength. I'm not going up, even if I'm growing for at a pace which I'm not impressed. But we can't give up, because we say the food you produce, when it goes to the community, they benefit more, and actually you make a lot of impact by producing food which feed the nation. I will end up here. So if you have any question, please, you are most welcome.
Great. Thanks, Wilfred, for also kindly sharing that experience. I think some of which kind of align to what Fortunata already mentioned, but you've given us a whole new angle to this as well. I'm sure people will have some comments to make, but before they do, allow me to bring in Ability. We've talked about the bank, the interest rates. Let's hear what NMB, as one of the commercial banks, how they see this landscape and what the plans they have, and some of the challenges and opportunities emerging out of this. Ability, you've had the two SMEs, some of the challenges they are facing. What are the NMB solutions?
Yes, thank you. And thank you, Enoch. As you have introduced me, my name is Ability Kakama. I am from NMB Bank. I work with our agribusiness department. And it's great to hear the conversation so far from all the speakers and the panelists on this session. And the conversation about SME lending as a bank, as a leading bank in the country. This is a topic that we discuss every day. But it's always good to listen to what SMEs themselves are facing. And today I'll also take is to speak about our experience as a bank financing SMEs. Now, I want to start by acknowledging the importance of SMEs to nutrition, which is pertinent to our session today, but also to the role of SMEs in economic opportunity that they provide for the country and for Tanzania, and particularly SMEs in the agriculture sector that we are talking about. We recognize its importance, and that's why as a bank, we give it a lot of weight, because we know that for example, personally, I think there is a link between economic opportunity and societies that import their food. When you're a developing country like Tanzania, you are generally agrarian in nature. Most of the jobs are linked to agriculture. And that is seen even from experience as a bank. When there's a crisis in some of the value chains in the country, you can quickly sense it from the other sectors that are not agri, like retail sector will slow down, everything will slow down. So it creates a base. So agri SMEs that not only provide nutrition, but they provide a base for economic opportunity for a lot of people and the foundation of economic functioning of the country. And as I alluded, I personally think there's actually a link between, for example, in West Africa, if you have to study the migrant crisis and the immigration that goes on to Europe, you find that those countries tend to be heavily food importing rather than producing, which takes away that part of the economic opportunity we're talking about. So we understand the importance and the heroic work that entrepreneurs running these SMEs, they are doing, and we would like to encourage them to persist. We know it's challenging and it's difficult. They are our partners. We would like them to stay the course. That being said, I would like to go and discuss a few challenges that we see from our perspective as a bank to lending in SMEs. And these tend to be across all SMEs, but some of them may be particular to agri-SMEs, and if there's that, we can point those out. But I'd like to start with covering an area of governance. So governance of SMEs is quite something that is almost most of the time non-existent. And when I talk about governance, we are talking about
Oops. We've just lost ability. I hope he has ability to come back. Okay. Sure he does. Yeah. Ability was saying, I hope you have ability to come back, and surely you do. Please go on.
Yes, I'll continue. So I was talking about governance, and under governance, there are two main challenges. There's a question of, in our language, you call it key man risk, but really what this means is the SMEs tend to have one person who runs the show entirely on their own. And this means the way decisions are made, the question of continuity becomes difficult to rely on. And a lot of gaps happen in that way because the way decisions are made, for example, we are not sure if they can be made prudently. I think you'd understand that separation, a little bit of a decision-making process and safeguards become non-existent. And from a lender's perspective, this means there's something, your capital is going on the line where you are depending entirely on one person. You can see how uncomfortable that starts becoming. But we find a way to work around this. We work with a lot of solo entrepreneurs, but ideally, as lenders, we would prefer these organizations have management and some management, and even ideally for SMEs that are mature. Like if an SMEs have been existing for 5 years, we would like to see a board, really. It gives us more confidence in the business itself. Another part of governance lack leads to fund diversion. So when we lend to entrepreneurs, they have, people start businesses, are very smart people, hardworking, ambitious. So they have a lot going on. So they'll come to you and say, I am setting up a processing plant and I need money for this machine and that, or I'll need money to supply my machines. You provide them money for supplies of raw materials. They think, you know what? I think I need to expand my processing capacity. So they'll take some of that money and put it into machinery. So the next time you go there, you say, hey, show me the raw materials and processing, and I hope the utilization of your machines is great. They'll say, you know what? I have this machine I bought, and now I don't have money really for supplies. How about we increase the loan? And you start getting into in sort of steering away from the purpose of lending that was existing. Now, a lot of people might think this doesn't happen a lot. Actually, it happens so much. It probably happens 80% of the time when you lend for one purpose and the funds are used for another purpose. Now, you'd say, what's the problem with that? If there's an opportunity, well, there's a big problem. I know a lot of people tend to think a bank lends against collateral. I have a collateral, I got the bank, I get a loan. therefore this money is my money because I put a collateral on it. Yes and no. Actually, we don't lend against collateral. As banks, we lend against cash flows of the business. So when you come to a bank and you present a plan, when we assess it against cash flows that will be generated to pay for, among other things, the principal on the loan and any other charges, including interest on it. So when you take the funds and take it to another project that's probably not as liquid, or to hold the money for a long period of time, or it has a higher cost than we built in our models when you assess your credit, basically you're throwing off the game, not just for us, but also for yourself. Almost the same as you being sick and going to a doctor and talking about one disease, and they getting diagnosed and getting medication and going home and deciding that in addition to the medication the doctor gave you, you're just going to medicate yourself and add something else. It's almost similar situation. I'm just trying to bring an example that's probably easier to relate to, but we find ourselves in that situation, and usually that is a big sign that there probably be default on the loan. So that's the challenge we have. Now, a solution to that is really to improve governance. See, before you make a decision, if a decision has to be made by 3 people, by consensus of 3 people on a board or in a management team, then we are talking about a whole different story than when one person or just 2 people who are closely related make that decision together. It takes away a little bit of group thinking when there is a proper governance procedures. So we would like to encourage SMEs to think about that, think about how they can improve governance and make decisions more prudently. That goes a long way to assure us that we are dealing with less riskier SME, and it encourages us to lend, really. It becomes an easier case. Now, the second challenge I'll talk about is bookkeeping. A lot of SMEs really don't do bookkeeping. It's an open secret in the industry that when a bank requires statements, they are generated out of bank statements. So someone goes back and says, "Let me what I've been transacting in a bank." So most businesses actually don't keep ledgers where they log their expenses in proper accounts. Now, this is a big problem because it means we are making decisions both as management of that business and for lenders as well. We are making decisions in the dark, blind of the really targets we are shooting for, because we cannot measure anything reliably. And that's a big challenge. And it's a shame that this is still a challenge, because bookkeeping was invented probably 500 years ago. It can be done digitally or manually, but it's a practice that we have not given importance and put enough discipline to follow as business owners. And that change needs to come from the business ownership to decide, to make that decision that we are going to keep our books properly, track our numbers, and make decisions both based on really proper bookkeeping principles and processes. It goes a long way to help a business from management point of view, but also from investors, whether they are banks or they are other partners trying to come into the business. And that point leads me to another point about the challenge of investment readiness. Are SMEs investment ready? We tend to receive SMEs that need loans from banks that are really actually not investor ready. And for commercial banks, in that case, we are being asked to take on a big leap than we should be taking, given the source of our capital being deposits from the market. Because when most institutions, they're not investor readiness, is symptomatic of 2 things that are probably covered. One is management, second one is governance procedures, and bookkeeping of records. If these things are not in place, then an entity is not investor ready. But these are the kind of, and the investments usually go in phases. So there will be private capital that will come into an investment. Then private capital, when private capital is sort of saturated, you bring in public, including commercial banking capital. But we get SMEs that at a stage where even private capital itself has not gone in, and not only has it gone in, but the entity itself as a business is not at that stage yet. And that stage is very important because it gives stability, some form of transparency and safeguards of the business, the way decisions are made, funds are utilized, goals are set. So most SMEs do not build up to that stage. So that investor readiness is like if we are going to go on a marathon, we need to get ready. I mean, if I've not been running for 5 years, I can't say I'm going to go to a marathon weekend and make that decision 2 weeks before the marathon itself. I need to get ready somehow, get fit a little bit. And that work of getting fit, for the most part, is lacking within the SME communities. And we would like and would encourage entrepreneurs, business owners to do an assessment and make sure that they get ready for this. And for the most part, that readiness comes in those three things: management, governance, and proper bookkeeping. A business that covers these three things properly can attract capital from anywhere and from anyone. Really, from anywhere and from anyone, and that capital will be cheaper. But the work needs to go in to make sure that that a business is investor ready. Now, I know I've talked a lot about those challenges. One other thing is the inadequacy of collateral, which has come up from fellow panelists, is true. But let's ask ourselves why collateral is inadequate for businesses. It's because the equity capital that has gone in is not sufficient enough yet. That's all that it means. The equity capital that has gone into a business is not sufficient enough. So there's that gap of equity holding in the business. And it's not a deal breaker. We have found ways to go around this. And one of them is we have partnerships with guarantee funds and schemes. That's one of the panelists alluded to. They will charge a percentage against providing a guarantee, which will then will add on. It will come in and complement your collateral so that you have sufficient collateral to get the amount of funds you need. It does not replace the need for the business or the business owner to put a collateral. It's just these guarantee schemes are meant to complement or rather complete a certain amount. And it's very important to also understand the idea of collateral is not just to safeguard the funds that the bank lends, but it's also to make sure that there's proper alignment of incentives. Because if you're starting a factory and as a bank, I'm providing 100% of the investment, then who owns the factory really? Is it you, the entrepreneur, or is it me, the bank? So part of the requirement is also one, yes, to protect the capital as required by the Bank of Tanzania regulations of commercial banks, but two is to make sure that the right set of incentives. Otherwise, we'll have pervasive incentives and then we can't run a business because if you don't have, they call it skin in the game, then the way you make decisions doesn't really follow what the expectations are. So we find ways to do that, and guarantee schemes is one of them. But for SMEs that are at a stage where they can attract more private sort of equity capital, whether it's from partners or from family or from private equity funds, if they can get more of that, that's a pathway to increase equity on their balance sheets and make them more attractive to credit investments, really. Another way we try to avoid the problem of capital especially for processors. I saw on the panel in food processors, is we provide supply financing. So sort of if you need raw materials, for example, if you're processing beans and you are purchasing beans from farmers or from the market, from the open market, we can provide either a collateral where we collateralize the beans itself, which is your raw material, and count that as collateral so that you don't have to put another collateral. And we provide maybe, we'll basically give you money to buy beans, and we say these beans will represent collateral. And you can use the beans and process it and sell it to the market. There's a way to do that. We also use warehouse receipt facilities to do that. So that does not require you to have collateral up front. It just says the good you are trading in or your raw material that you're going to buy, we will buy it. It will be under the supervision of the bank so that it's our collateral, right, instead of you having to take collateral on the table. So that's, I think that's part of our experience. Thanks for the opportunity to share. Let me finish by saying, really, lending to SMEs is a partnership. So every SME is different. Every business has a different context. Come speak to us. Come to NMB, come to our branches, come to our offices, speak to us, tell us your situation and what you need, and we are able to provide solutions that are tailored to your own situation and your own experience.
Beautiful.
Thank you.
Thanks, Ability, for that. We've heard from SMEs, we've heard from the one who has the skin in that game, NMB, lending to real SMEs, giving us and sharing us some of the experiences. But now to move the game on, I need to hear Sophia. You've heard from 3 panelists. Share with us some of the thinking at GAIN in terms of accessing finance and capital to these SMEs and some of the innovations that are coming through. Sophia, take it away.
Thank you, Enoch, and thank you so much to Sahara Ventures for inviting us to this very interesting discussion. So some friendly names and faces today, but for everyone else that doesn't know me, my name is Sofia Condes, and I lead GAIN's work in nutritious food financing. It's a real pleasure to be here with you today, and I'd like to give you a quick overview of GAIN's learnings and approach towards financing nutritious foods, and also introduce to you a mechanism that GAIN is launching in partnership within Cofini Investment Management called the Nutritious Foods Financing Facility. So if it's okay for everyone, I was planning to share my screen because I think sometimes it's good to illustrate with visuals and numbers and provide a little bit more structure to the conversation. So let me know if you see my screen. I'll just share a couple of slides.
Yes.
Perfect. So basically, a little bit of the why. I always think it's important to start with the why, and we've heard enough, so I won't go into much detail. But I think just some points to highlight the fact that we know that there's a chronic deficit of affordable foods in sub-Saharan Africa, and that was true before COVID, and it is true today. And if we don't do something about it, it will remain a problem that needs to be solved. I think Lawrence pointed out like really big numbers that we don't want to continue having to see in this kind of meetings, and we just want to kind of get down to the solutions. But I think COVID has come as a wake-up call to show how global food supply chains could be easily disrupted, and what that meant for food insecurity in Africa and for an increase in malnutrition. And also it helped highlight the role why it's so important to support the local companies to create more resilience in the local food systems. So when I refer to local companies, what I mean is what we've already kind of centered the conversation around here. These small and medium enterprises that are really the backbone of food systems in low middle income countries, but especially in sub-Saharan Africa, which supply most of the food consumed. So Fortunata and Wilfred are perfect examples of entrepreneurs that are doing heroic efforts to supply nutritious foods in the local market. Despite their importance, these SMEs are still undersupported, as we've heard. So we would like to introduce a couple of ideas of how we can better support them and why they're still undersupported. Here is a few points in quick summary, and back to the question that was asked by the ambassador. There is still a strong focus on export commodities, which is important for revenue generation, for increasing incomes, but is not going to do much for the dietary diversity in the local market. And what happens is that if we're still focusing on the quantity of food produced for exports, we're not focusing enough on the quality of food produced for the local markets and for improving nutrition in Africans. We still, despite the growth of the impact investing industry over the last 10 years, there is still no impact investing facility or fund that is explicitly focused on improving nutrition in Africa. Okay, so here again, we've already heard about it, but I think something I wanted to draw out of this, yes, there are financing mechanisms that SMEs can access in Africa, but they're not covering all of the needs of those SMEs. There is also an important need to provide more technical assistance. I think we heard from Ability about the importance of governments and good management teams. So also really important to provide better support there. And then I think a point I made to the question from the ambassador, how do we make sure the local nutritious foods SMEs companies are supported? There needs to be a stronger focus on providing mechanisms in local currency, which is currently not the focus of most international funds that are providing financing in agri-food in Africa. And then finally, the fact that most of these SMEs are local family-owned businesses. So often skeptical of investors that want to take an equity stake and dilute their ownership. So that's why long-term debt and mezzanine finance has been seen as one of the most promising avenues for supporting those SMEs. Here, I think we speak so much about the missing middle and people mean different things by it, but I think I wanted just to highlight that this is kind of coming back to a lot of assessments that we have done with GAIN, when we speak about what is the sweet spot of the SMEs that needs most support. These are usually the small and medium enterprises that need more than $100,000 and less than 3 million. We see that there's different mechanisms that cover the sector below. I mean, microfinance, cooperative, local banks, grants, savings. They are not sufficiently covered, but there are mechanisms. Then there's a lot of mechanisms above 3 million, and there's even kind of a crowding out of that space. But the space in the middle, there's still not really concrete solutions, especially in local currency. And that's why GAIN is working in this space. So how do we solve, how do we solve part of the problem? I don't mean to solve the whole problem. So this is one solution that we wanted to put on the table, which is a nutritious food financing facility. And that has been launched by GAIN in partnership with Incofin Investment Management. We thought that it was really important for us to partner with an investment expert because GAIN is a nutrition focused organization. We could provide the role of, and we have 10 years of experience in providing technical assistance and in being the nutrition gatekeeper. But the part of the investment that will belong to an expert like Incofin. So it has 3 main components. One component is the investment fund that will be looking to raise $50 to $60 million to support about 60 SMEs, making debt investments into the SMEs that have the highest potential for nutrition impact in sub-Saharan Africa. It will be using blended sources of finance, both public and private. So it's an innovative finance, blended finance kind of structure. And it will be managed by Incofin Investment Management, taking ticket sizes between $200,000 up to 3 million. So really focus on that missing middle. Second component is technical assistance. And this is really because we've seen that is as important as finance, the right finance is providing SMEs with the technical assistance to help them grow and develop their business performance and their nutritional impact. So it's about how do we work with them in improving their operations, their governance, their management, and also how do we make sure that the products they're supplying are safe and nutritious. And then finally, the third component is everything that regards monitoring, evaluation, and learning. And this is about embedding nutrition throughout the investment process and making sure that the selection of SMEs has a very strong nutrition focus, and also the monitoring of the impact that the SMEs will have. This is what we see as the externality of the fund, because it's really important for eventually all of the tools and criteria that we're developing to be able to be used by others. So I'm hoping that NMB will one day also be using some of those tools, and the same for my colleagues at the African Development Bank. So this is a target market. It is a holistic approach, targeting the full value chain, but there's a strong focus on the producers, the aggregators, the distributors, because we know that there still has been more focus on the production stage. And we see that those that are past the production stage are the SMEs that are more neglected, and where we see a stronger need for support, and where also GAIN has a more robust network of SMEs. Then a big question we get all the time is, how will we identify such SMEs? Anyone that has worked in investments in sub-Saharan Africa and in agri-food knows how difficult it is. So we feel that we're actually in a privileged position, because we have at GAIN, we have 5 country offices in sub-Saharan Africa. So for example, my colleagues like Enoch and Haika are based there and know the network and know the local context. And the same for Incofin, who's our partner. They have two country offices, and they have expertise making investments in 19 countries. So as you see, we will focus on targeting the SMEs that the highest impact potential, but also that meet certain financial criteria. And it is a Pan-African facility. So we will focus on priority countries where we already have a network, which are the countries where GAIN has a presence, but also we will be open to reaching a little bit wider to countries where we see more need and potential. And then I think back to the question of, how do we make sure that, why would nutritious foods require a specific mechanism? Because we need to make sure that we're supporting the good companies, and that we're excluding the bad. As you know, there can be foods that are actually quite negative for our health, and we want to make sure those are not the ones that we're increasing the supply and consumption of. So we need to make sure that we have the distinction, and that can only be done with the right set of tools and criteria that GAIN has an expertise developing, and which will be shared widely and will not only be used for the N3F. In terms of impact, I think whenever we go back to investing with an impact lens, it's essential that we anchor impact to the framework of the SDGs. We have a whole set of materials that detail our impact framework, but I think it's just going back to the really basics. The graphics that you see here is summarizing a piece of work where GAIN, we matched every single SDG at the target level to the activities and indicators that we can expect to track through this work. And it's just a confirmation of why improving food systems and nutrition has a waterfall impact on most of the other SDGs. So it really should be a priority for any impact investor to consider this. So what is unique about this solution that we're presenting? First, the fact that it's focused
as you finish, Sophia, yeah? Yes?
Last slide.
All right, thank you.
It's focused on nutritious foods that will be produced and consumed in the local market, that it will provide capital in local currency below market rates because it has a subsidy component, that it will focus on providing technical assistance to improve safety and quality of the food produced, as I mentioned, a unique nutrition impact framework, and also that it combines both the expertise of a nutrition and an investment expert, but also the network. So I'll stop there, and I thank everyone for the contributions. I have been thinking a lot through the session and taking notes. And I welcome anyone else that wants to learn more about GAIN's approach to nutritious food financing. Thank you.
Thanks, Sophia. Thank God there is someone else who is going to class just like I have. I've been taking notes since this session started. This is more of a lecture for me. At least it makes 2 of us. I think in the interest of time, we are quite a bit behind, I think, because of the richness of these discussions. I will bring Sahara Venture in, but I will now postpone till the end so that I can bring in African Development Bank perspective, having heard all this, and immediately after bring in AGRA for them to share their own perspective, given what they've heard, probably not what they didn't know, but definitely cementing some of those things and making them more localized. Andrew.
Great. Thanks so much, Enoch, and to Sahara Ventures again for inviting me to this really interesting conversation. I had also prepared some slides, but I think in the interest of time, and also because this conversation has been so rich from you, have been also taking lots of notes. I think I'll just speak to some of the issues that have arisen. So I'll say one of the reasons I've been taking a lot of notes. I think Enoch, when you got in touch with me and invited me to speak, I was wearing a different hat at the bank. I was the manager of our division for agricultural research, production and sustainability. But just since the beginning of the week, I have taken up a different position where I am leading our development of a new program on agri-SME development and innovative finance. So I think
it a result of
that
this?
puts me, well, let's say as a result of a general trend that is ongoing.
Okay, please go on.
And also a result of clearly the bank's own commitment to want to play a much bigger role in really supporting the financing of what's called the missing middle, not just SMEs, but that missing middle of finance to get to them. And we say missing middle is defined differently here in the bank. So within our Feed Africa program, which is our strategy, from 10-year strategy up to 2025, that really is about transformation of African agriculture. And a real big component of that has been, of course, increased productivity and yield, which continues to be important, as the ambassador also has mentioned. But then also, making sure we, rid malnutrition, and we recognize, however, that particularly due to COVID and as we're going into our midterm review, we recognize that we really need to enhance our focus on the outputs. By this outputs, we mean on nutrition outcomes, on healthy diets and the whole system. And a big part of trying to figure out how we can help support that and accelerate that transformation is finance. How do we get support down to Fortunata, to Wilfred, and others? I think our particular role in Feed Africa, we have sovereign. Our clients are largely government clients, so sovereign clients, and now within our portfolio in Feed Africa, which is about $6 billion US. A much bigger component of that is for the public sector. There's a growing public-private sector. However, we are now our non-sovereign support in the private sector in agriculture right now only has instruments that targets 10 million and above. So what we are now trying to do is develop innovative instruments to be able to support more this middle. How do we get more finance to them? I think you had Lawrence when he began. He said finance will come, and I think that is the case. We are seeing more of the bottleneck being not so much in the provision of resources, more and more, particularly this climate internationally. There, finance is cheap, interest is at historic low interest levels, and also we are seeing an increase in commitments of institutional investors in values-based values-based investing. So in elements to do with climate resilience, to do with increased commitment and support to women, to youth, to climate, and also to SMEs. So I think we can do quite a good job in tapping those resources. The question is, how do we deploy them and support the and get increased support to the medium and small enterprises. So just a couple of the things that we are planning to do. As I mentioned, one of the elements that we are starting to develop is really a set of how do we improve our support to increasing lines of credit to financial institutions. And this would be institutions such as NFB, to Ability and the rest. Of course, also, great to hear of the rise of instruments such as the Nutritious Food Financing Facility. I think these are the type of partners that we are keen to invest. It'll be more difficult for us to go further down the chain to really deliver resources to Wilfred or to Fortunata. But I think what we can do is support organizations that work with banks. So, for example, recently we were having discussions with I think the Justin, the managing director for the Tanzania Agricultural Development Bank. Sophia, we look forward to having conversations with you to see how we can support the partners that you work with. I think for us, one of the key things that we're also looking for is how to support capacity building technical assistance. Clearly, that is also another key bottleneck that we have heard about. Ability, talking about questions of governance, a whole set of clients who come, but maybe not, don't have the capacity or not recognize the importance of keeping books and so on. How can we provide support to that in a larger scale? I think one of the other things that we can do, not just finance, but as a bank, we can help with the type of policies, policy support that is needed. So when, for example, the ambassador asks a question as to what do you mean by nutrition sensitive, and is it difficult in providing general support to this space to agricultural SMEs? And Sophia says, well, here we are trying to, we want to support the good. One question we ask is, what would be the best and most effective instrument to support the good? And this could be through policy, through regulation, through taxation, shifting incentives toward healthy foods, toward fortification, increasing taxes to those businesses that are providing or supporting the provision of unhealthy salts, fats, and so on. So these are the type of things we can do. How can we increase the generation of the deal flow? How can we provide support to catalytic grants? Recently, we were supporting a group of, we have a go-getters program that we support with with Agra and others. And one of the winners was actually a Tanzanian company, Pharma Agri, that is developing a system using digital infrastructure, digital platforms to increase financing to smallholder, small, medium, and small, medium businesses in the agri-food value chain. So these are the kind of things we want to do. I think given I see timing here, and I know Jennifer is coming after me, and I think for us, one thing that is certainly important is how do we work with partners like Agra and like the Tanzanian, like the Tanzania Agriculture Development Bank. How do we work with GAIN and others so we can really provide that financial support that is needed? So looking forward to continuing to engage with U.S. partners, given my new position and the bank's commitment in this space. We'll be reaching out, and it's really been interesting and insightful to hear some of the opportunities and challenges being faced. Thank you.
Great. Andrew, thank you very much for those experiences. We are definitely excited that you are wearing a bigger hat since we started speaking, which is not so long ago. When you want to become the president of the bank, please tell us. We'll organize another meeting and you will be promoted to that position. Yes, thank you very much for those comments. Jennifer, we'll run over to you. Sorry, we are running over, I think, by a few minutes, but it happens when you have such a rich panel list.
Yes, thank you very much, Enoch. And this is definitely a very rich panel. Thank you for inviting me to GAIN, and also, of course, Lawrence. I do have to give credit to you and to Tanzania, because a lot of what it is that we're also scaling and expanding in a sense, like what my unit is working on in Agra, has a lot to do with what we learned also in Tanzania in terms of how to navigate this space and actually catalyze investment mobilization, including for SMEs. So the credit really goes to the Tanzanian audience, and Enoch, for you also being a continuous champion in that space. I really listened with a lot of great interest to all the speakers, actually, from Lawrence, the ambassador, but I really also appreciated the honest feedback of their real life experiences of the SMEs and also NMB. And it's interesting because it touches upon so many things that it is that AGRA is doing. I think a lot of actors probably know us from the work that we've done in developing access to seed for African farmers and SMEs. But AGRA's work really spans the entire value chain across 11 countries, and we've been working with 3,000 SMEs, over 3,000 actually. I think this year we hit 3,500. And we really interject in value chains for a wide variety of activities. But of course, our main focus is how do we actually optimize the access of farmers to improve technologies, knowledge, training, etc., but also finance in order to ensure that we can achieve food security, and how do we work with governments to do that as well. There are quite a number of activities that we have introduced to support SMEs. From working with governments and financial institutions on guaranteed funding. One of the interesting things in the whole list of NMB that was so fascinating is just the whole capacity and governance of SMEs. So we have quite a number of programs. Just to give you an example, one of our SMEs was invited by quite a large off-taker to participate and become an aggregator in their chain. And AGRA support us really to ensure that the capacity within that company was actually strong enough, from governance to bookkeeping to basically be not just investor ready, but also partner ready, because I think that's very critical, agriculture ecosystem to function in. And it's great to hear what all of these different actors are doing. But one of the things that we started focusing on in the past 3 years, and that I've personally championed together with other partners like GAIN, is how do we actually translate all the fantastic work that is happening on the ground? How do we translate that to a regional platform and do that at scale? Because there are still quite a number of bottlenecks for the SMEs in our hidden middle to access finance, as Sophia so eloquently stated. And I think also in the past decade, we've seen a bit of fatigue around the whole narrative of how are we going to solve this finance challenge. So we really took a bit of a different course, and we said, you know what, we have to take these ecosystems that exist at a national level to a whole regional level. And we have to strengthen the narrative and really bring that entire ecosystem at scale. So we introduced the agribusiness deal a few years ago. And this year we had over 4,000 participants virtually, including 700 companies. We shortlisted 208 SMEs from across the continent, and we supported them and facilitated them with a couple of things. Getting investor ready to engage with not just equity providers, but also with financiers like our financial institutions like an NMB, but also to be ready to engage with partners from anchor buyers to governments, to a wide range of actors, development programs, etc., specifically targeting also SMEs, also business development providers, because a lot of the capacity that they lack could be outsourced or supported by business development service providers, but there's often also a mismatch and also a challenge with the capacity of the service providers themselves. So we managed to create over the course of 3 years really this ecosystem, and I think we're once again not even shifting the narrative, but re-emphasizing how critical it is to mobilize all of our efforts and support behind the two SME actors that we had today, Fortunata and William, who joined us, because they are going to be really the key to unlocking the African agribusiness transformation across the continent. So it's very interesting to work with partners to make that happen. I don't think we're there yet. We really realized a couple of things. First of all, COVID, I think, changed the landscape for everybody. So we're also now looking at a wide range of solutions and technologies to do a couple of things. One is to keep a finger on the pulse. Where are really the pain pressures for SMEs? And Lawrence mentioned the survey that GAIN held. We've also conducted similar surveys, and I agree. The resilience of our SMEs is actually quite strong, but we have to come to their support relatively urgently. And now with this community that we've built, we can actually do that. Second is also to facilitate stronger engagement between financial institutions, potential partners, and SMEs, but do that year-round. And with that also comes investing a lot more in the preparedness of SMEs across a wide range of things. So we, for example, also looked at the creditworthiness of SMEs. What are the specific interventions that can happen, and how can we as AGRA also support reducing that risk through our programs and activities as well, and working together with partners like an NMD, for example. There are also other things that we're doing. I was very happy to have Fortunata here because we're specifically also focusing on women SMEs and what are the challenges that they're facing and how can we support them throughout the year to build towards momentum and engagement with a variety of partners. Last but not least, also work with financial institutions and investors because there are a lot of challenges, and as Sophie also indicated, the focus is very strong on the safe side of agribusiness, right? Export, cash crop oriented, and we are challenging the entire landscape to come up with a lot more innovative solutions, such as the fund presented by GAIN, that also touches upon the real need of a wide number of SMEs across the continent. I'm aware we're short of time, but what I would like to emphasize also in the light of a lot of global dialogues that will be happening next year, think about the Food Summit, but also within Africa itself, I would like to really extend a hand to an SMEs and say, our eyes are really on you. And there are partnerships and coalitions being formed across the continent, a lot more efficiency in terms of streamlining of programs to ensure that we really start hitting the nail on the head a lot more in order to provide you with the services, the growth opportunities, and the risk reduction tools.
I don't know whether it's just me or Jennifer's line. Okay. Jennifer, you're back.
Yes, I think.
Okay, great. There was a freeze, I think, for about
yes.
a second or so.
Yes.
Great. No, I think we've heard you loud and clear, and I'm impressed. Agro, actually, the numbers you are not working with small. I'm impressed by those numbers that you're targeting, the numbers you're reaching out, the number of coverage. We really look forward to all of us working with Agra, working with FDB, taking this forward. I will not try to summarize or recap because I do not have such a brain, but there is a brother of mine here who has such a brain to summarize such big stuff. And his name is Jumaine from Sahara Venture. Sahara, why don't you give us a summary? I know we've kind of run over, but it's out of these interesting discussions and things that are coming through. I mean, we've done some work before. We've looked at systemic. You've had the question of governance in SMEs and how that limits the ability to get financing. I think we've been working on this with you a bit. Why don't you share as you recap all of these, whatever session, Jumane? Take it over.
Great. First of all, thank you so much, Enoch, for this exciting facilitation. Thank you everybody who took their time to join this conversation. Honorable Ambassador, Dr. Lawrence, Fortunata, Ability, Sophia, Andrew, Jennifer, and others. Actually, this is what we're supposed to do more. For me to be able to realize a bigger mission and address one of the most complex issues facing our community today. You have just heard the number from Dr. Lawrence, 3 billion people worldwide who cannot afford healthy diet. That's not a joke number. So to address a very complex issue like that, you need systematic interventions. You need to build this ecosystem of players working together to address these issues. And this is what we are trying to do with GAIN Tanzania. When you have an accelerator working with an institution like GAIN working with the government, working with the development partner, coordinating stuff with the banks, you're building that ecosystem which will allow you to be able to address these issues. So my responsibility basically is to do closing remarks and appreciation. I would like to appreciate your time, your effort, and your commitment toward addressing this challenge. What I want to say, for us to achieve this, especially in terms of being able to addressing this challenge, our priority focus should be to really try identify solutions that are desirable, feasible, reliable, but also viable to small businesses, because these small businesses are the ones who are going to create these sustainable solutions when it comes to address issues around nutrition.
So again, we are very much open for collaboration, specifically strategic collaboration that opens room for win-win for all the partners, as well as we are ready to work with some of the partners to address the issue of the missing middle support. And this is part of what Sahara we are trying to do. We believe by building capacity beyond just financing businesses is what will ensure this business have the intended impact. I was also supposed to comment on our partnership with GAIN. So I've been doing a lot of work with GAIN in Tanzania. Part of what we do in Tanzania is something called Lishe Accelerator, which is Investor Readiness Program, an IRP program, to get some of the SMEs, which are nutrition SMEs, nutrition sensitive SMEs in Tanzania, to be investor ready. It's more of a design sprint, a fast sprint program, an accelerator where we help them with their marketing, their branding, their business model strategy, how they integrate technology in their business. And there have been a lot of lessons learned from those programs. First of all, Sahara Accelerator does a brand of a program. So we do both startups and SMEs. What we came to realize, there's massive opportunity working with SMEs in Africa because of two main things. So they have number for the size of the market they target, but as well as their post revenue, and you can have traction of whatever they're doing, which gives you an evidence of support. The mainly challenges that they're facing, again, this is some lessons that we've learned from the Lishe Accelerator. The first one is internal systems and structures. Most of these businesses lack internal systems and structures, which makes it very difficult for a formal financial institution, whether it's microfinance or bank, to support them. Another issue also, these businesses, they are not designed to scale. Primarily, they have been designed to solve small markets. So without a proper capacity building or accelerator program to support them, most of the time they stay stagnant in terms of growth. Another thing also, they lack clear strategy for growth and marketing. And those are some of the challenges we've been trying to address with the accelerator. So again, we are very excited and we are looking forward to work with all key people who have got a chance to comment or share their learnings today. And the video will be online, available on YouTube. So let's continue to document these lessons so that we can work better next time. Thank you so much, Enoch, for the opportunity. Thanks again, and let's continue our productive partnership.
Great. As we sign out, I think there will be, I'm sorry we haven't had really time for questions, but there is one question posted here which will go to all the banks. This will go to Ability. Sophia, try and answering. Andrew, please try it. It is a question from Gaudencia Bakire. She says, time frame from loan application to time for success is very long. Why does it is like a gestation period of an elephant to get money from these institutions? Please try and answer, starting with your Ability.
Yes, hello. What I can say on that is it depends on what the timeline considered is. For example, if it's a seasonal, if you are dealing with something that happens seasonally, we would appreciate you do it way ahead of season, because the shorter period of time you give us for a turnaround doesn't work well, because there's a series of feedback that has to go back and forth. So this is a shared challenge between the institution like NMB to make sure we have a quick turnaround and we respond to our customers on time, but also it's a shared challenge on customers to be able to provide reasonable lead time and cooperators provide the needed documentation and everything within a time frame required. Yep.
Thanks, Ability. Andrew, do you have any comment to that? What do you think is takes so long?
Well, I think this is exactly why we want to come into this space, but to support the development of institutions that can help build the capacity to either one, fast track these processes, or two, allow for the provision of more patient loans, or different types of structure that can allow and recognize the longer gestation period that is natural for some of these SMEs in the agricultural space.
Great. Sophia, do you think you're going to fall in the same trap?
I can't really add much more to what has been said. I'm not a financier myself, but I think from my experience, it's really about understanding the needs and being able to provide to those needs in time for like the whole business trajectory. So it's about really kind of supporting the business at every stage and supporting in a way that is quick and efficient. And I think that one conclusion from this is that we still have, there's been a lot of progress, but we all still have work to do to be able to meet those needs in the timing that the SMEs need and with the flexibility as well. I think some of that patient capital that Andrew mentioned is essential.
Great. So all I can do now is thank you really very immensely for your time and for gracing this virtual event. As your moderator, I'm sorry I didn't manage time well because we are 17 minutes later. Think on purpose because I wanted you to share all those beautiful work that you're doing. Blame it on me that you're 17 later than your next appointment or assignment. But it's been such a great pleasure being your moderator, and I'm really humbled and honored to be associated with all your names. Let's do this once again and enjoy your evening or whichever part of time of the day it is. Thank you very much and have a great rest of the day. Bye for now.
Goodbye. Thank you so much.